Yeah, I think the price will go up, right? I mean, you basically have a supply shock to an asset.
Today, I sit down with Bitcoin expert Anthony Pompliano, and we discuss everything you need to know for the upcoming Bitcoin halving. So think of this as your cheat sheet, your ultimate guide, so you are prepared for what's going to happen in 2024. And before we talk about the price impact, Pomp, what is the halving?
Yeah, the Bitcoin halving basically is approximately every 4 years. The Bitcoin reward, which is the amount of Bitcoin that's included for miners when they mine the block of transactions, gets cut in half. And so it started out, it was 50 Bitcoin for about 4 years, and then it went down to 25 Bitcoin, then eventually 12 and a half, 6.25 where it is today. That translates to about 900 Bitcoin a day. And it's going to get cut about 10 months from now to 3.25 or whatever it is, 3.125. And it'll be about 450 Bitcoin per day that will come out. And so the reason why that's important is it is essentially a telegraphed change to the monetary policy of Bitcoin. And so unlike the legacy financial system where we don't know what the central bank is going to do next week, at least here we know well out in advance, years in advance, when and what is going to happen to the monetary policy. So it's pretty crucial.
Something that's very different for Bitcoin halving versus gold mining is if gold is really being hyped up and, there's a lot of demand for gold, people can just invest in more gold miners. And then that brings more gold into the ecosystem, dilutes the supply. Bitcoin is very different because no matter what the demand is, you can only get the certain amount per block. Could you go into that?
Yeah, just think about the price of any asset is determined by supply and demand, right? Went to an economics 101 course. It's like the first thing they teach you. And so when you think of supply and demand, usually they are both variable components of that equation, meaning that if you look at US dollars, how many dollars are going to be in circulation? Well, if you looked at that in 2020, you probably wouldn't have predicted that trillions more dollars be put into the system in the next 18 to 24 months. But also at the end of 2021, you wouldn't have thought that they were going to drain liquidity. And therefore, the central bank was going to take $1 trillion off their balance sheet. So the supply ends up being very variable. Demand obviously is variable as well. So sometimes people really want something, sometimes nobody wants something. And so when you have two kind of moving targets of supply and demand, it becomes complex and difficult to predict where is the equilibrium? What is the price of that asset? Where is it going to clear in the market from buyers to sellers? The thing about Bitcoin is that the supply is fixed. It is a programmatic monetary policy, meaning that from day one, there was a monetary policy that was written into software code, and that software code simply executes based on the parameters and instructions that it has. And so part of that monetary policy is the total number of Bitcoin that will ever be available, 21 million Bitcoin. A second component to that monetary policy is these halvings going from 50 to 25, 12 and a half, et cetera. And so the reason why it is important to understand that there's a fixed supply side of this equation is that you can model out the supply. Give me a date and I can tell you how many Bitcoin are going to be in circulation on that date. Because I know what the monetary policy is, I can go in and I can audit it with the code. Now, there is still a variable demand side to the equation. In the end of 2021, a lot of people wanted Bitcoin. So the price was really high. At the end of 2022, not so many people wanted Bitcoin. That's why the price was low. And so that variation still can create oscillation between the prices on kind of milestones of Bitcoin, but it is much easier to go ahead and model out future Bitcoin performance because at least 50% of the equation, the supply side is fixed and known, and now we just have to worry about the demand side. So that's really one of the kind of benefits of Bitcoin and its monetary policy.
I look at charts of past Bitcoin's halvings, and I see about 12 months after the halving occurs, price goes up. Do you think this will have a price impact?
It has to have a price impact, right? Whether it is up 500%, 20%, or down 20%, it has to have an impact. And so there's this belief in traditional finance of the efficient market hypothesis, which is complete bullshit. The fact that someone won a prize for this is like laughable. The theory is that when everyone has the same information, the market prices that information correctly, and therefore the market is quote unquote efficient, right? Everyone is acting on the same information, and therefore everyone then creates this kind of efficient price or kind of equilibrium. By nature, that is a falsifiable kind of statement when I tell you, if I give you and I the same exact amount of information, and then I ask you what's going to happen, and you think it's good for the asset, and I think it's bad for the asset, How can there be an efficient market? How can it be, even if we have the exact same of information, we come to different conclusions? Of course, there's no efficient market. The whole point of a market is that it is inefficient. There's opportunities for buyers and sellers to come together, express their view in the market, and to take financial positions to benefit from those opinions becoming reality. And so if there was an efficient market, then we wouldn't have a need for investors or any sort of market clearing type activity. And so the reason why I start with this, kind of destruction of the efficient market hypothesis is because when you look at the Bitcoin halving, even if 100% of people knew what the Bitcoin halving was and 100% of people knew when it was going to happen, there still would be some subset of people who thought that it was bullish, some subset of people who thought it was bearish, and some subset of people who thought it was agnostic. They didn't care either direction. And so those people take different positions in the market to express their view or their opinion, and therefore that has an impact on price. Now, does it go up? Does it go down? That's anyone's guess. When does it go up? When does it go down? Anyone's guess. And one of the things that we've seen in the past is there's been kind of a buy the rumor, sell the news around the halving. Leading into the halving, price kind of runs up. Halving happens, price doesn't explode immediately. So kind of draws down a little bit, goes sideways. And then to your point, 9, 12, 15 months later, then the price seems to go up quite a bit. And so it's interesting to me because when you look at that through the efficient market hypothesis, you're like, man, this doesn't make any sense. If everyone knows that the Bitcoin halving is going to happen, then you would expect everyone to act the same way. But in my opinion, it just simply proves the fact that markets are inefficient, and that is where opportunity exists. You wouldn't invest in a market that was fully efficient because there would be no returns to be kind of gained or captured. And therefore, the Bitcoin halving has to have an impact on price, and it has to have different people taking different positions. And so when that occurs, anyone who tells you the Bitcoin halving doesn't matter just doesn't understand how markets work.
There will only ever be 21 million Bitcoin in existence ever. Yet the last Bitcoin won't be mined for over 100 years. So what happens? What changes after that last Bitcoin is mined?
Well, from a practical standpoint, anyone who's watching this right now in 2023, you should just stop thinking about it because you're going to be dead. But let's say that for people who are watching this 100 years from now, the current belief is that the transactions fee for the Bitcoin network will be enough to economically incentivize the miners to continue to mine the network, to continue to help contribute their computing power, secure the network, et cetera. There has been a subset of people who disagree with that. They are critics. They say that is not going to be true. Recently, with the rise of inscriptions and ordinals, we saw for the first time ever that the fee revenue that miners were able to capture outpaced the block reward. And so this kind of proved the point that, yes, even now today, while there still is a block reward, we can have fees spike high enough where actually miners can make more money from the fees rather than they can from the block reward. So again, who knows what's going to happen? I have no clue. Trying to predict what's going to happen in 6 months or a year from now is hard enough. Trying to understand what's going to happen in 117 years or whatever it is even harder. You're not going to have to worry about it. So I wouldn't spend too much time on it. But for those people who are living at that point, that's the current belief, is that simply the transaction fees will be enough to incentivize people to continue to mine Bitcoin.
How come nobody cares about the Litecoin halving? That's happening this year. Maybe traders do because price is increasing against the US dollar a little. But what are your thoughts?
Yeah, I mean, look, I think a lot of people, specifically in this industry, they have over time become hardened to the idea. There's this big universe out there now in the cryptocurrency space. And so, I don't know, there's 20,000, 25,000 different coins that you could go and look at. But same thing as in the traditional financial system, if you simply are able to focus and you're able to understand, okay, this specific thing, I want to get really, really well educated on. I want to really understand it. They don't have a lot of time to look at other things, right? And that's why you see, back in 2017, 2018, if you went and you talked to an investment kind of organization or a trading organization, they had like one person who covered, 5 or 6 different areas of the industry, or maybe they had, 2 total people on the team and they could cover the whole industry. Today, that's not possible. You have Bitcoin, you have DeFi, you have NFTs, you have, all the gaming stuff. Like, you can just go through. There's so many different components to the industry that you can't have one person cover everything. everything. And so that's where you start to get kind of specialization within these investment firms. And you start to actually even get, let's say a Bitcoin team or an NFT team or a smart contract team or however they want to kind of organize. What I do think is happening when it comes to Litecoin or any other coin, it's just there's only so much bandwidth people have. And so what occurs is that Bitcoin is the largest market. It's the most liquid market. It's the one the institutions seem the most interested in. It's the one that seems to have gotten through the regulatory threshold and everyone agrees it's not a security. And so naturally, that's where a lot of attention is going to go because it has the most liquidity and the most certainty. And therefore, that allows for people really to focus on it and deploy capital into the market.
In our final 5-6 minutes, I want to expand more to macro, but just because I want this to be a everything you need to know video about the Bitcoin halving, just like in summation, could you address to those average people what to expect for the 2024 Bitcoin halving?
Yeah, I think the price will go up, right? I mean, you basically have a supply shock to an asset. You have something that right now 900 Bitcoin per day coming to the market, and the price has been going up in the last couple of weeks, which means that there are more buyers than there are sellers. If there's more buyers, that is net new demand into the market, and they're eating up not only the 900 Bitcoin that is being put into the market every day, but they're also there's more demand than that, and so they're having to buy coins from people who already have Bitcoin, and that's where you get the price continuing to go up. Well, if all of a sudden you go from 900 Bitcoin a day to 450 Bitcoin a day, that supply shock, cutting in half of the incoming daily supply, obviously, if the demand stays the same, not even increases, just stays the same, then you are going to have the price go up over time because there's less Bitcoin coming into the market every day for the same amount of people who want that Bitcoin. Again, supply, demand, economics 101. Now, what is interesting about the Bitcoin halving also is as we get closer, the media starts getting louder. They begin to talk about it. They begin to say, oh, we're 10 days away. Oh, we're 4 days away. They go and they get a bunch of talking heads all chirping about what they think is going to happen. They have people come on YouTube and podcasts and Twitter, et cetera, and everyone starts talking about what's going to happen, what's going to happen. That's all marketing for Bitcoin, right? Is talking about the halving is marketing for Bitcoin. And so naturally demand increases around these events because more people hear about Bitcoin. They're like, oh, that didn't die. I thought that was dead a couple of years ago. Let me go check that out. And so that increases the demand. And so you have a supply shock. We're getting a 50% cut of the daily incoming supply, but you also get this demand shock where there is more incoming demand every single day. And that leads to cut the supply in half, increase the demand, price goes up over time.
I want to remind the audience, links for Pomp, Twitter, everything down below in the video description. Check it out. Macro-wise, Pomp, are we in for a deeper recession? What are your thoughts for the second half of this year?
Yeah, I mean, it's kind of weird, right? Like we had a recession and then they just like disqualified it. It was like, the experts came in and they're like, no, 2 quarters of negative GDP growth. That's not a recession. It's a recession when we say it's a recession, which is kind of like a ridiculous thing. So like some people would argue like we already were in the recession. Other people would look and say, well, look at the consumer. The consumer has, these really great things. The labor market's tight. There's kind of all these bullish, signals or metrics that folks look at. Whether it is actually classified as a recession or not, I think is less important. What I do think is important is that there is very much a subset of the population who's going to experience greater financial pain at the expense of another part of the population. So if you go back and you look over 2020 into 2021, what happened was people with investable assets got richer, right? All those asset prices exploded higher. Those were all the kind of bull markets and the bubbles, et cetera, that formed. But the people who lived paycheck to paycheck and had 100% of their wealth in cash, they actually got punished, right? They lost purchasing power. They got the erosion of their savings. And so you had this bifurcation in society. Many people will point to the income inequality as kind of the product of that bifurcation that's been happening. What I think we're seeing happen right now is the exact same thing, where you're going to have kind of the bottom half of the kind of economic ladder. They are going to continue to receive more and more financial pain. At the same time, you're going to see the investment class continue to gain more and more wealth. The NASDAQ is up 32% to start the year. Bitcoin's up 85% to start the year. These are big numbers, regardless of whether they're already drawn down a lot or not. What you are seeing is double-digit returns in the first half of this year. And so usually if you get some sort of big jump in the beginning of the year in these financial markets, for the year, they will end up. Now, not always, but usually they will end up for the year. And that would suggest that people with investment assets will do better than people who don't have investable assets. And so I think you get kind of a bifurcation. And even if it is a official recession or not, the bottom half of the economic ladder is going to continue to feel a lot of pain, unfortunately.
You personally, you're all Bitcoin, you're holding forever, but you do have a investment fund or just an investment arm of the entity that is Pomp. How have you changed? How have you positioned yourself personally for the end of the year, or what's one change you've made?
No change really. I mean, I bought some more Bitcoin earlier this year. I tend to think that, it was undervalued just because it had crashed so much. And in the past, buying it kind of, near bottoms of bear markets seemed to be pretty good and work out. And so that was really the only thing that I did in kind of the Bitcoin space. Outside of that, I've been doing a lot of investing in early stage venture capital, building a lot of businesses, stuff like that. But in Bitcoin specifically, I don't know if it's necessarily a change, just, bought more Bitcoin.
Final question to you, and this has nothing to do with Bitcoin. Just it has to do with you, more life advice. Finish this sentence. I became successful when I understood blank.
It's all on you. You either succeed or you fail based on your actions. And there's a lot of people who believe in luck, but as we've seen over and over again in the research, luck is not real. When you walk across the street and you get hit by a car, and I do the same thing and I get hit by a car, and let's say we both lose our legs, you may say to yourself, man, I was really unlucky to be walking across the street right now. And now I lost both my legs. But when I walk across the street and I lose both my legs, I may say, man, I'm really lucky to be alive. And so luck is this psychological concept. It's all about our opinion and our reaction to events that occur. But what most people confuse is probability and luck. Probability is a mathematical equation. What's the probability that you would be walking across the street at the exact same time a car was going to come and it was going to hit you? And so by understanding that luck is not real, then you can say, okay, well, what will determine my outcome if it's not luck? And it's your actions, your decisions. And so the beauty of that is it's on you. If you bet on yourself, if you make the right decisions, if you go and you do the right things, then you can create a better life and a better opportunity for yourself. The downside to that is you can't just sit back and, cross your fingers and hope that, the great luck God is going to smile down on you. And so you got to do work. You got to make those decisions. And so once you start to understand like you're in control of your future, I tend to think that people really focus. They start to increase their chances of success. And what I've seen over and over again is that they end up actually realizing whatever their dreams are.
I love it. Links for your stuff down below. Thanks.